Chipotle Mexican Grill as a company has had a very roller coaster of a ride in the last few years. Today's video is the first of a two-part series where we're going to talk about Chipotle stock, and we're going to analyze why we think it's a strong buy. In this first video, we're going to discuss more qualitative factors. We're going to discuss the restaurant industry more broadly, the characteristics of it, and we're going to discuss the history of Chipotle. We're also going to take a quick snapshot look at what's been going on with the company as of late. And in the second part of the video, we're going to get more into the numbers, and we're going to go over valuation and show why we do think it's a strong buy. Chipotle for the most part operates in the restaurant industry in America. It isn't that much of a diversified business in that most of its stores are in America. They have a few in Europe and they have some in Canada as well. What you have to understand about the restaurant industry is it is continuously growing. Millennials in particular lead this trend as they eat more away from home than any generation prior. FAFH is food away from home. And in 2016, which is their most recent study, food away from home or restaurant consumption in the United States equals to $800 billion. 94% higher than what it was in 2003. So in just about 13 years, that number almost doubled. This speaks out, in my opinion, to the behavioral change we are seeing in the world today. Now, when you're analyzing restaurant stocks, it is important to consider that restaurants are very sensitive and positively correlated with the shape of the economy. What this means is that when the economy is doing good, restaurants are doing good as well, and when the economy is doing poorly, restaurants are doing poorly as well. In the case of restaurant stocks, they are very amplified in performance in regards to the economy. And this makes a lot of sense if you think about it conceptually. When the economy is doing well, people have better incomes, their disposable and discretionary incomes go up, and one of the things they spend this excess money on is restaurants and bars and going out. At the same time, when the economy is doing poorly, people have to budget more tightly. One of the things they cut back on is restaurants and bars. Why? Because it isn't a necessity compared to, say, rent or electricity and utilities. So to further add to this point, we have a graph from the Financial Times website. We look at the S&P 500 Restaurant Index, which is a small category of restaurant stocks within the S&P 500, and we look at their performance in the last 3 years relative to the S&P 500. As you can see, it has outperformed the S&P 500 more broadly. And this largely is due to the performance of the US economy. Unemployment is at 3.9%, near 10 and 20-year lows. At the same time, taxes are lower as well, which increases consumption, and the stock market is at near all-time highs. When we look at the history of Chipotle as a publicly traded company, for a long period of time their stock was performing immensely well. At one point their stock was almost at $800 a share, much higher than what it is today. Today's stock at the low 400s is a shadow of what it used to be. The main reason the stock dropped from its $800 stock price was due to an E. coli outbreak that they experienced around 2015-2016. This really hurt the company in regards to its reputation and the traffic it was experiencing in its stores. However, it is important to consider the history of E. coli in regards to restaurants. Taco Bell and Jack in the Box both experienced E. coli outbreaks as well in the early 90s and early 2000s. In their case, you could say was a lot worse because people actually died when they experienced these sicknesses. In the case of Chipotle, nobody actually died. However, in the digital age we live today, news passes on a lot more rapidly and is oftentimes more amplified, in that people can share it and it can become viral. So because of this, the effects Chipotle felt due to this E. coli outbreak were a lot worse than what Taco Bell and Jack in the Box felt. However, because Jack in the Box and Taco Bell both fully recovered, prospects are looking good for Chipotle to recover as well. Consumers can often be fickle and forget about the past as they move forward. Another important characteristic you have to understand about Chipotle is they do not do franchisees whatsoever. So with the lack of franchise opportunities, they often have to foot the bill when they open up new stores. And here's a graph of their store count over the years. As you can see, they've been growing immensely. Management has quoted in their 10K annual reports that it costs about $835,000 to open up a new store for Chipotle. Now, not doing franchisees is both a positive and a negative thing. It's a negative thing that you have to pay a lot of money up front yourself, whereas with franchise opportunities, the franchisee acts as an investor and covers a lot of the cost. However, it's also a very positive thing in that because there is no franchisee, you take 100% of the pie if the store is to perform well. And with Chipotle continuously opening new stores and expanding internationally, this points to growth opportunities and positive outlooks. And the last thing for qualitative factors that I thought I would include is that Chipotle just hired a new CEO. Their former CEO and founder Steve Ells was told to step down not too recently. And many shareholders in the market in general applauded this decision because he has had a rough time in the last 2 years in managing the company. In fact, you could say he has destroyed shareholder value. Their new CEO, on the other hand, Brian Niccol, What makes him so right for the job is that he was the former CEO of Taco Bell, and you can say with a great deal of accuracy that Taco Bell and Chipotle are very similar businesses. Yes, there are a few key distinctions, but for the most part, they operate in a very similar manner. And given that Brian Niccol has been successful in one business, it is fair to assume that he can be fairly successful in the other. He already has pointed out to a few key changes he wants to make to the company, one of them being is he wants to introduce a breakfast menu. That changes the company's revenues big time, and it is one key point I'm going to be talking about in the next video as we go over the financials of the company. So I want to thank you guys for listening. Stay tuned for the next video, and I hope you guys have a nice day. Take care.